Welcome back to another episode of Constructive Conversations. I'm your host, Olivia Anthony, and today we're diving into how technology, AI, data analytics are reshaping the way real estate investors, mortgage brokers, and private lenders approach both construction and rehab lending, and why that matters for everyone involved. Today's episode also feels like I've been invited to sit at the grown-up table of private lending tech. We have three brilliant minds with us: John Adractis, CEO and co-founder, John Ryan, COO and co-founder of TrustPoint AI, and my colleague, Megan Castleton, Chief Credit Officer here at Constructive Capital. So welcome all, and thank you for joining me. And by way of further introduction and to kick us off, I'd like to know a little bit more about each of your backgrounds. John Adractis, we'll start with you. Can you share some of your background, which does include time at Google, and up to the founding of TrustPoint AI?
Thank you, Olivia. With pleasure. First, I think for me, I really began my career having studied mathematics, and it was really one of what does one do with that? And I started very early down the path of strategic consulting, and I was opportunity to explore different industries. And I gravitated almost instantly to the technology sector. I think the ability to build things and see that at scale. And for me, very early days, I was at Google, and that was truly an opportunity to see what that felt like at what started out at tens of hundreds of millions, ultimately billions of users and beyond. My time, I was working on Google Maps and Google Earth, and that was really fun. Those were relatively early products for Google at that time. Fast forward, I've been a part of 5 venture-backed enterprise software companies, in particular focused on the financial services world. Most recently, having built the first vertical fintech in healthcare. We're bringing together the worlds of payments and billing at the context of tens of millions of patients across the United States. And as thinking about the world of real estate, this is really a chance for me to kind of connect back with my past, where it was my father's side hustle that I was a part of as a kid with construction, part of fix and flip during college, trying to pay my way through school, and living in California, which means I bought a very old house that I also GC'd the turnaround of. So a great chance to bring those worlds together now.
Great, thank you. John Ryan, how about your background in the industry and in operations, and how it influenced your vision for the platform and its inception?
John Ryan, COO and co-founder. I spent my my career, late comer to tech in financial services on the institutional side with Bear Stearns and Goldman Sachs, primarily focused in fixed income, structured products, mortgage-backed securities, trading, lending, and sales. I left Goldman in 2018 when the private equity side of Goldman bought a company called Genesis Capital. I left, Goldman formally and joined Genesis as the Chief Revenue Officer and Chief Strategy Officer. And along the way, we brought TrustPoint on to Genesis. And I was enamored with the technology, recognizing the near complete lack of technology within the industry, and became a board advisor, and ultimately joined full time as the third co-founder and COO.
Megan, a bit about your background, especially where you've seen the most meaningful impact from tech partners like TrustPoint AI, or projects where you've intersected directly.
Yeah, thanks, Olivia. So Megan, Chief Credit Officer here at Constructive. I actually met John and JA at a trade show. And I was actually there looking specifically for tech to fill some of the needs of clients that I was working with at the time in a consulting capacity. And the conversations were, fascinating from the get-go. And so that, there's definitely a lot of synergies in their backgrounds. So, my background is banking, institutional lending, originations, due diligence, post-close asset management, and then operations, right? How do I build the perfect Frankenstein? And it's been an obsession of mine for about the past 20 years. And through my consulting, business, sitting with John and sitting with, all of the partners at TrustPoint, it became very, very evident that they wanted to envision the process differently. They believe in standardization of processes, standardization of languages, standardization of an industry that, previously was kind of the wild, wild west and on spreadsheets. And so, their mission and their goals aligned with mine. And, since then we've done a couple really exciting projects together and have had a lot of discussion and planning around, what's next for the industry. How does Constructive and TrustPoint work together to solve some of the current, scaling issues for Constructive in the construction management space, particularly? But how do you also use that data into credit and risk and managing assets? And so it's been a really exciting partnership. So I'm very grateful to have met, all of the team at TrustPoint.
Thank you.
Likewise.
A lot of important topics we're going to be covering today, and insights that, if you're a broker listening, really impact how you position yourself with your clients or scale your portfolio as a lender, or any operators that are trying to manage risk without slowing down approvals. So get your pen and paper ready. It's going to be a lot of big words flying around today. But first, before we dig into the platform itself, I want to start with the story of how it all began and how it went from concept or idea to enterprise platform. So I'll open the floor.
So
John
our
R.
earliest incarnation might be a little different sounding from the lender piece. It was really coming out of having conversations with so many actually personal friends and people that I knew, where there's just a common problem of people couldn't trust the work that they would do as a consumer, as a homeowner. And in that earliest kind of ideation phase, you dig in deeper and you start asking questions, and in particular, understanding how things were financed. The more I learned around the challenges that the homeowner faced, I realized that it's at a much greater scale when you start picturing a portfolio and significant capital at risk. And then you start realizing all the layers that exist, where then, well, wait a minute, that are some of those original lenders, talking both to banks and private, it's not necessarily even their capital. And then it's like, well, there's money behind that, and who's setting the rules? And you start realizing that there's this entire set of nested, and the people at the top making the most amount of rules in some ways and the capital at risk have the least amount of access to information. And I thought, wow, it's really fascinating, like how as like a problem, and that you're talking about significant amount of money at risk. And as you fast forward in our evolution, the lender became really the focus for us, as how do you help the information to be richer? How do you help decisions to be more systematic? And while everyone talks about the moment where you're underwriting, and that tends to get a lot of the attention, so much of what's unique to construction is that you can underwrite with the smartest controls possible that still won't save you from the operational risk that comes because you've just underwrote something that doesn't exist. You may have even underwritten something that someone's going to basically systematically demolish and build something new. And that's really extraordinary if you think of it in the context of making informed risk decisions. And I think that for us, as we thought about it, and you see in the choice of name, TrustPoint, is how can you enable points of trust, whether it's between the lender who has to trust the stakeholder of the borrower, who has lots of other stakeholders, or that originating lender and their capital providers, and really trying to create a system where you can actually have information that feels rich, can create decisioning support, and ultimately help to make this entire space, if you will, much more institutional grade information flow and much more proactive, rather than lucky to survive the information that you collect every day and you even know what's actually happening.
Yeah, and I would just add to that, when you think about the opportunity set for our customers, but really the industry in general, you have this incredible capital formation that's coming to the market, right? With different investors, institutional investors coming to market, partnering with originating lenders. As John mentioned, everybody wants to be able to look at the data and have access to the data and the efficiencies. You have the regional banks pulling back really dramatically in this space, given the bank crisis of a few years back. And you have technology, moving ahead at effectively warp speed. So you have this entire ball of activity that's occurring at a very a very critical time for our country when we need to build housing, right? So it's all coming together at one time. And I was interesting. I was doing some reviews of technology for the consumer mortgage lending space. And, if you go back 40 years where it was local mortgage bankers and local regional banks and real, near zero technology. And over time, you've seen the technology, it's like every 3 to 5 years as technology has kind of evolved. And it took 40 years to get to the institutionalization and the technology where the consumer mortgage space is right now. I would argue that the capital formation plus the technology innovation, the RTL, business purpose lending industry, is going to get there in like 2 to 3 years. It's happening at lightning speed. So it's super exciting to be a part of it. So that's why I jumped in with both feet.
Yeah, there's a huge technology transformation in terms of operational efficiency, which kind of leads me into my next topic. Today, TrustPoint AI is considered a technology suite that is for construction renovation lending. So I want to get into kind of what that encompasses and what are some of the core services, solutions, use cases. In other words, what is TrustPoint AI?
John, you want to take us out on that one?
Foundationally, for us, it starts with asset management, where the world of origination, people often have, a potentially software, something homegrown. They may very well have a servicer that they're using independently. And then there's everything in the middle. Like, how do you actually know what's happening with the asset from that moment? You said yes. And now it's the dark side of the moon in some ways, because you have different people doing bespoke processes. And they may even be bespoke within a team, but certainly across lenders, it can be extraordinarily bespoke. And having a asset management focused solution where the collaboration amongst stakeholders, so whether that's to the borrower, whether it's to the lender or various functional teams within, potentially externally to parties that have audit rights or related rights to that, which could include the loan buyer, if there's a loan buyer involved, or other parties, a warehouse line with a note-on-note type financing, or even securitization. They have this layer of workflow within asset management, which then on top of that, really having the visibility, what we call the portfolio analytics, which is a view where now you're not in the trench staring at each individual item and focus at that granularity. You're looking across. And this idea that a holistic view of what's in your portfolio for a given sponsor, what is the holistic view of what's happening with them, and seeing that bigger picture and understanding what are more portfolio level risks as opposed to the draw to draw level decisioning. And those two pieces, both of which have software and now in particular analytics. And by analytics, it's health scoring, predictive analytics around thinking when things complete, whether that's a project completing or the need for cash and disbursements at the treasury side. And then those are complemented where there's a host of services that one needs to perform this. And we are first and foremost a technology company, but we've become an enabler where whether it's hiring a national service provider of inspections, or thinking about title, thinking about feasibility, things at pre-closing, post-closing, enabling where you don't have to have now 12 portals so your team's running around trying to basically orchestrate all of these things. And that's happening automatically in the system, and in some cases even automated where you don't have to even think about, hey, did we order the inspection? That can occur automatically. You have choices, you have flexibility. You're picking what you want, but now it is happening effectively systematically throughout. And the information that you get of everything we discuss is not unstructured PDFs and information. It's rich, structured information, including from service providers, that we can further enrich on top of that, and ultimately add, as we do, proprietary things like a health scoring view, so you can understand the healthiness of this project, or when will this project complete, which helps to inform you on engaging with that borrower for future sales opportunities, helps you to engage with borrowers on loan extensions, helps you to think about the cash you need just to perform and to manage that treasury function. So the asset management, the portfolio level, and I think increasingly we really see across the functional suite of a lender, they're just a broad array of needs, and everybody's starved for data. And I think we find that how do we help meet the needs of the enterprise, right, as the lender, or the capital provider behind that lender as well.
Yeah, we know there's a lot done in terms of data collection and maybe not so much in data analyzing or analytics. So Megan, I'd love your input on this in terms of the cross collaboration strategies between TrustPoint, Constructive Capital, and our broker clients, and maybe how this benefits their borrowers, as you mentioned, John. How is this technology going to help Constructive Capital evolve into today's standards and to more modern processes?
Yeah, so look, the application itself standardizes input, it standardizes, reporting, it standardizes individual line items, and processes, right? And so for a business that's scaling or at scale and continuing to scale beyond, $2, $3, $4, $5 billion, the problems become compounded with simple errors. So, this eliminates that, definitely keeps guardrails around the processes, which is comforting, that TrustPoint, has some of these things that really reduce the headcount. So, thereby reduces costs. So from just a platform perspective, there's this huge lift there, right? But it's what can be done with those analytics, right? So our entire cost to manufacture alone is really centered around getting to know these borrowers, really trying to understand these projects, really trying to understand, does this budget really perform in this geo with this qualification, with this FICO? How do all these things come together? Is our guidelines correct? How do we give better service at scale to our individual clients, to our brokers, and how do we partner in a meaningful way to our capital, right? Where we're really analyzing and keeping a mindful look at risk and true analytics that exist here, right? And, I love about Constructive is we don't know everything, right? And we are willing to continue to learn and push those boundaries and continue to grow those things. And the partnership with TrustPoint really challenges those things, right? So, I'll share a project that we're working on right now. Right now it's used for construction management, but the analytics are so strong, and the ability to qualify and quantify those analytics at a capital provider to a broker network level are so strong that we're going to put, rental data into there. Okay, well, how does rental data help you? Well, it helps you with the exit. It helps you with borrower performance. It helps you understand, all of the other standardization and metrics. Does this really hit a rental exit in this market? How does the servicing data on these DSCR really feed backwards into construction management as well, right? And you really get to a point where the analytics and the data, rather than feelings and market and opinions, really start to shape your risk analysis and your ability to scale up and make intelligent exceptions and intelligent decisions across the RTL product suite, right? This is not a exercise in perfection when it comes to building a property or building multiple properties, right? And it's really, how do you make good choices as a capital provider that, keep the wheels on the bus with your borrower, but also keep the wheels on the bus for capital and your capital partnerships as far as risk and managing risk. And for me, there's bar none, no one else that I've worked with that thinks about it that way, that really sees the challenges in the manufacturing and the capital process and the technology process, right? Technology has to be usable. It is, just not this single vertical where you go, okay, here's the solution and this works for everyone, right? And it's a testament to TrustPoint and to the relationship with Constructive that we have these really open conversations and we share, like, what are our challenges? What are the challenges across the entire manufacturing process of these loans from, even as the consumer is thinking about it, all the way up to how our capital partners are thinking about it and buying from us, right? How do you make securitization faster? As you make these processes faster, we're able to get capital out faster, better, stronger. And, it's a really exciting time to be in lending and to be in tech and to work with, folks who understand the world in 3D and not just, here's your tech solution and off you go.
I want to make sure we emphasize why this matters to brokers and lenders on the front end. So I'm a broker. I have an investor trying to fund their next project. How does having this technology behind the scenes change the experience for me or my clients?
And I'll take that one. Day one, they can do their requests through an app, right? And that's newer to the market. In their at the job site on a handheld device, they can start plugging in their request to get their draw as they've just completed a portion of their project. For a broker, what that means is the borrower remains happy. The borrower is able to access their capital very quickly and deliver their project on time, which means they're going to come back to the broker as well to go back and do that project again, right? And now the broker's happy because it's got a happy customer. The customer had a good experience. The customer is coming back to the broker, and the broker's coming back to us as the capital provider, right? So it's really that life cycle of how do we get faster and stronger. From there, it's the execution time, right? We compress the execution time to go request capital, or we have, a better and more finite vision of what capital needs to be on hand. So we're reducing our costs, therefore passing that along through rates or other incentives to the broker, to the salespersons out in the market. And that continues to improve that life cycle and that experience on all sides of the fence. And then you really look at it from the capital delivery, the ability to quickly take loans now that have completed and move them into a DSCR exit and back into the market for a long-term exit, or to get the loan out, for sale quickly, and kind of finalize that life cycle. So now it's going to go into the consumer world, and a borrower is going to go out and buy it with that broker, right? Because these guys have had such a great experience together. So it's really understanding that life cycle from a broker perspective and a customer perspective that TrustPoint really, begins to give you that edge, because you can get to end project, you can get to the capital faster, you can execute faster from a lender perspective. And for brokers, that's happy customers, faster turn times, the ability to make more money and do more loans.
Yeah, I would add to that the sense that it's while the platform is highly complex, it's simple things as much as you think about the brokers and their clients who are borrowing from Constructive. It's knowing what sits in your request queue versus the lender's request queue. Has the inspection been ordered? How long has the inspection been out? Has it come back? Right? Hey, these are the specific documents that we need in order to approve your reimbursement request. Right? Similar to like how you would take out a consumer mortgage. In this industry, for the most part, that doesn't exist, right? So the ping pong back and forth of spreadsheets and emails and texts, and it really weighs on the borrower experience. And the borrower is obviously a client of the broker, so the broker probably hears about it as well. So it's just it's introducing efficiency into the system and taking the model of what's worked in the consumer mortgage lending.
It's transparency, right? It's efficiency and transparency, right? You look at the consumer space and you look at how easy it is for a broker to understand what's going on with their loan transaction, more than just a pipeline. This is a continuation of that pipeline experience for them. Where are they in the draw process, and when should I go back to them and approach them for another loan or the exit? It's giving that transparency on all sides, to our capital, to our brokers, to our borrowers. It's really joining all the pieces that have been Frankenstein very manually together.
And that really, I think, for me, typifies also why initially, knowing Megan in the context before Constructive and what she brings in vision and connecting in with that Constructive Capital team, where she's thinking holistically, not just about risk, about the customer experience and journey, about the idea of the different products that come throughout that journey. And I think it is something fundamental where you can look and see them, if you will, the analogy of the consumer world, and say what aspects of that can be applicable here. And just because it's a construction loan and a business purpose loan, for instance, does the experience have to suck? And say, no, it doesn't, right? And to put it bluntly, it's like some of the things in the consumer world are good for a reason, because they've been polished at an extreme of volume, an extreme of expectations. Sure, some of it is also driven by regulators. It might drive us all nuts, and there's lots of documents and T's and C's. But how to take some of the best of that and having that analogy to kind of push ourselves and say, well, how can you bring that thinking here? And just because it's a private lender that maybe focuses on a construction loan, but there's an experience because it's not going to just be a construction loan. It may have started as horizontal work. It'll move through vertical, and then maybe it's a building moving into a build to rent, and it will have throughout that journey different loans. There's different aspects of risk. And I think this is one where, in particular, like the vision that Megan was talking about in terms of the world of DSCR and connecting. If you're doing a large BTR project and you have hundreds of units being built and you know that it's going for rent as a strategy, the construction side is already thinking about that risk, ideally, proactively. They're not just, hey, did I build these units and are they launched? They're thinking about, well, have they started to be leased up? Am I systematically making progress to have what the end result is, which is a building that's, for instance, rented right at scale? Well, that world naturally intersects with the world where you're already thinking about, and now it's a debt service coverage ratio and it's a functioning building and a business. And I think it's very natural that these worlds start to intersect, and so too that lending changes. And like if you've already gotten a taste for it, is that Constructive is thinking about pushing those boundaries. And it's exactly seeing how the world could be, how it should be, and versus how it is today. That's really a kind of the exciting area. And it's why I will say, like, we enjoyed tremendously our connection and partnership with Megan personally, as well as in the Constructive Capital context.
Yeah, I mean, it's for a technology company to have access to Megan and Constructive from an innovation perspective and client experience lens that they're always wearing it's huge. It's huge because then we get to geek out on everything and we go build it. So
yeah, and I mean, selfishly, I solve constructive problems, right? But really, it's solving for a broader market, and it's why Constructive, right? Why Constructive? Because it's Ben's passion, it's Tessa's passion, it's every person in the business with Constructive's passion to do better, to do it different. We're not trying to reinvent the wheel, because lending is lending in some ways, right? But we also don't see the world through everyone else's lens. And I think that's really important. And to challenge something, you have to have analytics to it, right? Facts fight feelings, right? You can have a feeling about something, but the analytics are really what speak to that and paint this really powerful picture. I mean, I almost wish today we could pull up the TrustPoint dashboard, right? Because the way that the analytics display and the way that you can paint a picture of where you are, what you're doing, who you're working with, what do your geos look like, where are your products and projects at any given time, what's missing from the market, right? That data drives what the next product's going to be, what's missing for these guys, what's missing for capital, what's missing for the broker. How do we get to a place where, we are making decisions in such a radically different way where it's individualized, right? Almost like healthcare, John. It's funny that you have that background too. It's not about the overwhelming solution for all. It's what fits this borrower. And construction is so unique in that way. It's really trying to qualify and quantify something at scale that is a very unique experience each and every time you do it.
Megan, just to put a even finer point on the healthcare analogy, I think the world originally of healthcare, of intuition-based medicine, and the buzzword within healthcare is precision medicine, and the idea that a therapy, a treatment, is truly tailored to you. You're not just to your disease, but your particular genetic predisposition. I think of the world of cancer treatments or anything where it's no longer. I think leukemia is actually just a word that groups, I think it's 13 different subvariants as an example. And how do you create the therapy that works for you depending on what you have and your unique disposition? And you think of that for the lending equivalent, right? Of precision risk management and precision lending in the context of truly tailored, because you could see a borrower and love the borrower, but the borrower's working with counterparties that don't increase, that are not a credit plus. And you could have the vice versa of that. And it could be in a region where that is not a credit plus. So there's so many systematic things where it has to be, you have to like the borrower, like the project, like the geography that it's in, like the moment that they're doing it, and be aware of all the things that like life happens, including we live in a world where if you're not, thinking about extreme weather events, which could literally tear the roof off in the middle of your project or at the end of your project, right before you thought you were renting it. And we live in that dynamic world.
All right. Yeah, and I mean, I would say too, you live in a world where everything's changing, right? So how do you envision and how do you predict where you end up, right? It's the conundrum in construction. Like, where am I really going to be in 18 months, right? It's that crystal ball. And really data, both predictive and historical, kind of drive that vision, right? How do I make a good risk decision? What data do I provide my capital partners to help support, my decision for this borrower in that particular geo? And then from a broker's perspective, how do I help my clients understand the project and or the risks that they're taking in this project? Maybe there's a better way to do this project. Maybe there's a better way to construct this budget. Maybe they don't need to do this, maybe they need to do that, right? And so, TrustPoint has those pieces in some of the ability to build a budget, to analyze a budget, to make that again transparent to a broker. And now you're really empowering a broker to kind of be the doctor, right? How do you solve the problem? Because the rules are kind of built in for us, and there's prediction there, right? So they know, hey, based on this is our view of this project and this borrower. How can you get this information out to them and help be a resource of education versus a reactive partnership as a broker, which I feel a lot of brokers feel like that, right? They're just reacting to whatever they're being told with whatever lender it is. Like, this empowers them, and our capital wants to empower them to be able to be the resource for their customer and their customer's experience.
Yeah, no, Megan, and the fact that Constructive trusts us, with their clients, is something that we take very seriously, right? Think about B2B software, and it's if we're doing our job right, Constructive's brokers and customers are going to be very sticky with Constructive because the experience works. One thing that you also mentioned, which kind of, as we're sitting here, and yes, the nuances of construction and renovation lending, along with the structured data and the standardization, right? Like with the explosions in the capital markets, with the coming in and the rated securitizations, and we feel that this industry is, if we are all successful, at some point, this data is going to be, when people look at securitizations on a Bloomberg terminal, right? They're going to be able to model the way they do other corporate credit bonds, consumer mortgage-backed securities, you name them. And so it's a huge tailwind to the developers, right? Who are doing the projects, to their brokers, to the lenders, to the capital behind it. And this is where we see things going from an innovation perspective, because the time is now. Because this was not possible, when everyone was operating on spreadsheets and emails and texts. And there's a couple older technologies that have hung around the hoop for a while. But like this is a next generation move for the industry. So we're thrilled to obviously be partnering with Constructive on it.
Exactly what I want to explore next, zooming out and looking forward, how tech is shaping private lending and the capital markets. So I want to, again, open the floor to all three of you. Where is this all headed, and what's next for brokers, lenders, and how they interact with this data as the market becomes more digital?
Yeah, Jay or John, I'll let you guys jump in there, and I definitely have some thoughts there too.
Yeah, JR, you might want to lay a foundation there.
Yeah. When I think about what technology is going to accomplish for this industry, it's multiple phases, right? And let's put the borrower and the broker over here, their experience. We've got them dialed in. They're going to be fine. They're going to get better access to capital, faster turn times provided by Constructive. But when we get into an enterprise lender solution, right, we have now unlocked the data that will allow not only the credit team and the asset management team, but the treasury and capital markets folks. You think about, obviously, portfolio and operational risk management. You think about the sales teams, right? Because this is now data that can be used to cross-pollinate across the entire enterprise, right? So what does that do? That makes your team internally much more powerful because they're all looking at the same set of data, and they might have their own opinions on it, but like that's obviously why those folks are sitting in those chairs, but they're getting access to the data. And so we are unlocking the lender effectively. And then there's a consistent message within the company, right? And also with their capital providers. And then different, lenders have different capital partners, and capital partners work with, multiple lenders. And then the whole industry really starts, it's truly becomes a software enabled network that allows capital to flow freely to address, frankly, address the housing needs of our country right now. That's where this is going.
Yeah, for me, it becomes more like credit modeling, more ways and more predictive modeling for what's appropriate, right? Flat guidelines that say 700 and FICOs and 5 experiences get you X, I don't believe in necessarily, right? I think those are part of the formula, but I don't think it's the whole picture, right? And how do you get a staff, or how do you get a singular person to have that much data to make that kind of a decision, right? So this really gives everybody the ability to think the same way and then beyond, right? So you standardize the vanilla, and then you can really think beyond. I think it reduces, to your point, the cost of capital, right, over the entire structure on the Wall Street side, on the securitization side, as well as to the actual ground level consumer user. It reduces, not only friction and timing, but it reduces cost all the way across the structure there. So for, Constructive, this is really about how do we get to a place where we have the right sized automation, but also the relationship, right? We're still providing relationship. I don't ever want to get to a point, and I know Constructive feels this way, and TrustPoint does too, where there's not a human in the loop, right? There's always this idea that AI and these kind of, technologies are going to get everybody out of a job. You can't quantify and qualify what's in, 40 years of experience in a human, right? But you can make that a more powerful tool and, put it out there in the world in a way that is easier to digest and easier for that human to, be able to go on and do more, right? And that's really for us, how do we do more with the same size team or even smaller, right? Like you really start to envision the world from that, but never without the people, because to Constructive, to TrustPoint, to everybody, it's really the people, right? It's the relationships, it's the thinking that goes on and continues to innovate. I know we're going to get to a place in lending, much like consumer, where, there's not a lot of ground to cover anymore, right? And it's a great problem to have, but for me, I always want to find the next thing. I always want to innovate the next thing. Constructive wants to innovate in this space and in this place. I think we're getting there, catching up 40 years worth of tech in 3 and 5 year increments. And I agree with you, John, 100%, but to really do it, in a space where it almost feels like you're walking on the moon, right? It's one of the first to be there, it's one of the first to do this, but to still strengthen the relationship and still to focus on the relationship and the people, I think is really, really powerful.
Well, as we talk about what in some ways how it transforms, and you picture if initially the world, as we've talked about earlier, where an interaction of a broker and a borrower with a lender could feel very manual, more hand to hand, if you will, of every single interaction. As you move toward a world where it becomes the norm that there's technology enabling self-service, it's a great trade. I think a trade that's happened in almost every industry. If in the past for me, and kind of looking at this from a tech lens, you compare to other, and you think, how many people today would show up at the airport and think, no, I really want to print my paper ticket and I want to stand in that line and talk to somebody? No one really, right? That's the line now of people that they didn't have a choice. There was some reason they had to be in that line. How many people are, and think of borrowers, think of people, no matter how tech oriented and forward you think they are, how many of them are still standing in line at the teller to get their cash? Probably none, really close to none. Like we're at this point where you look and you say, okay, you're unlocking a world where now, because the information is flowing faster, it's not just they can get their funds faster. Of course, that's an immediate effect. They can also start to understand and have more predictability. And that has value to them when they think about their business and their planning, because the borrower has a portfolio too. It might be a portfolio of one initially, it might be a portfolio of hundreds of. So they think about that world. And if you keep looking at that in each of the different stakeholders, from the borrowers to the brokers in between to the lenders who are thinking about their portfolio, and now you're enabling that information to flow where you could start to have next level optimization. Yes, there's productivity gains, but then this idea of the relationship. Would you rather spend your time with the relationship where, yes, you gave them a really great face when you were underwriting, and then now it's really mostly about asking for data and going back and forth, but now you transform it where instead it's spending more time talking about potential challenges, talking about the opportunities. So you're actually up-leveling what you can do as a relationship manager. You're up-leveling what they can achieve through that relation. And that really pulls everything up a level. And I think this is just a natural, it's kind of like the evolution of man chart that you see. It's like how you enable where you don't spend 80 to 90% of your time just collecting data and passing it to people. You spend much more of the time having conversations about what it means and looking at problems in advance, and not just after they've happened under panic and duress and with a much higher kind of, sensitivity to it.
Yeah. And for Constructive, how do we reach new markets, right? One of the biggest challenge coming from a consumer lending into this space is these processes don't talk to each other. They don't have standardized languages. They don't have a standardized process. You don't have an API that connects directly from a broker system into our system. They have no idea what they need to ask, right? If someone has never been in the RTL lending space, what's a budget? How do they build a budget? How do I fill this out? What information do you need from me as a broker in order to do a loan with me? And really, that's been the disconnect, I feel, for the consumer space, to be able to offer this as an additional revenue stream to their partnerships, because they can't understand or get to the information, right? So when you talk about how does TrustPoint standardize these things, how do we make it easier? There's this API data exchange. There's all these different fields of information. Okay, well, we can standardize those. We can create an application that can be standardized, that can be put into, a CSV or a JSON or any of these other things housed and given to a broker. So a broker now has at least the standard knowledge to walk through an application to get the right information out of their borrowers, right? And then bring that back and build those budgets and get the feedback and say, look, this isn't, a budget that's going to work, but if we did this and we did that and you reduce this and you reduce that, like, here's what we can offer, right? And that's all they're trying to get to. And it's such a confounding process, right? Because everyone views the world so differently. It's the thing that I feel like Constructive wants to focus on the most through these processes, right? Of how did we standardize this? How do we make it faster? How do we make it easier to understand? And having all the analytics and the cheaper capital up front, again, opens this opportunity to unlock a market that we are not able to reach at scale in most cases for most private lenders, right? Who's your next customer? And Constructive believes our next customer is, a consumer industry that, its clients are looking for real estate investment. Gold is a big thing. Real estate has always been the big investment, right? How do you pass wealth? How do you create a legacy? How do you create the next borrower? It's addictive when you start to think about all the ways that this data and the standardization of these processes really start to reach and unlock different markets and different revenue streams.
And that standardization playing through to the world of capital markets. And as we really kind of zoom out, where just the unlock of having initially unrated securitizations, ultimately rated, which potentially 10x's, if not more, the amount of potential entrants of interested capital, whether it's more permanent capital sources, insurers, whether it's different asset manager and other entities and sovereign wealths, where as you think about that capital and the attractiveness, relatively speaking, because when we talk about consumer, it's a great paradigm to learn from user experience and pieces, but it's also one that inherently becomes commoditized. That's what goes with this. And that takes decades to work through. So here now, by comparison, is a place where the spreads are attractive. And now you start to have the signals that this is a place that institutional capital can appropriately put their capital without taking significant risk. So you picture how this can continue to be a really virtuous cycle, right, where you're enabling then smarter capital that can feel better about pouring in, which creates greater scalability, again, back to the greater predictability. And you can see how that could really just plays on through in terms of the transformative effects at the industry level.
And really, the more you scale, the more data
data
you accumulate, right? And so the better the predictive analytics and the better this gets. And, it's really cool to think about at scale, like what data can do.
Yeah, and it's interesting, Megan, because and we're all well aware of the migration of this lending wallet effectively from some of the regional banks that were operating into private monies plus private money plus asset managers and the such. But when the lending was done out of the bank, right, the banks, the experience was not great, right? And effectively, the banks have large deposit requirements, right? So in theory, the borrower, your brokers are well aware of this. We're getting, potentially getting less leverage, worse customer experience, et cetera. Whereas you have the private markets that are able to take smarter risk with more data, right? Because that data didn't exist when it was with the regional banking system, right? And now that it's with many folks on the private credit side, and they're using that data, they can make real informed decisions. Hence the advent of the rated securitizations, as well as the capital that's relying on the data that's being provided by TrustPoint and Constructive to your capital partners.
Yeah, I mean, to your point, the market has really been taken over by private equity, private capital versus, bank-led capital. I think the growth, a couple of years ago was projected, private capital was doing about 80% of the deals. I would venture to say it's higher than that now. I think, private capital is probably doing 90% of the deals in this space, as, there continues to be a contraction in the banks and the institutional space. And then institutional, money has come out into this space and wants to get interested in this space, but they don't know what they don't know, right? And so TrustPoint, again, lowers that bar for entry, standardizes that data, and continues to create opportunities for capital, continues to create that opportunity in the marketplace, for anybody and everybody that, wants to be a part of the standardization of that data or utilize that data as part of their process.
So as we wrap up, I want to make sure our listeners know how they can learn more about TrustPoint AI and how you can connect with our guests, how they can connect with your team. Where can they find you?
Yeah, I would, you can hit us at sales@trustpoint.ai or, visit our website, trustpoint.ai, and work with our online chat team.
Awesome. I have one final bonus or sign-off question. If you had to summarize the biggest opportunity tech unlocks in our industry in one word or phrase, what would it be?
I would say it's observability. That's a word we use in the tech industry broadly. It's often talking about hardware and machines and observability of performance and systems. But the notion of observability of a portfolio, observability, whether that portfolio is with any of the stakeholders that we've talked about, I think it's raising what's the art of the possible, and feels like it's something expansive. We could talk about what that means next year. We could talk about how in 10 years that will continue to improve upon, but observability would be my suggestion.
Yeah, I'm happy to go next. I'll think about it from the approach of to what end, right? Banking on what John said. Technology and truly just data, allowing all stakeholders, highlighting the exceptions to allow all stakeholders to be proactive in decision making.
And for my point of view, I think it's predictability, right? Predictability of capital, predictability of data, predictability of the market. I think that's what tech and AI in general, brings to the market.
I agree with all three of you. So if you are a mortgage broker, lender, capital provider listening, I hope this gave you a clear picture of how technology isn't just streamlining processes, though it is inclusive. It's about helping you move faster while making more confident decisions, managing risk, scaling smarter, and building better and stronger relationships all around better data. And TrustPoint's platform helps make that possible. So thank you to our guests from TrustPoint AI, John and John, and of course to Megan for helping me guide this conversation. And to our listeners, thank you for tuning in to another episode of Constructive Conversations. Until next time.
Thank you, guys. This was fun.
This is great. Thank you, Constructive team.
Thank you.
Thanks, TrustPoint
Thank you.
team.
Thank you, Olivia. Thank you, Constructive.